Welcome to ShortView Trading. This is your morning market hit for Wednesday, 13th of May. What matters today for traders? Well, the price action in the US was poor yesterday, with the major indices selling off into the close, having opened higher at the start of the trading session. All major indices closed down, with the S&P 500 down around 2%, but other notable features included the Philly Sox, which was down 2.8%, the Russell 2000, the mid-caps down about 3.5%, and indeed the Nasdaq banking sector down around 5% on the session. With that, all 11 major S&P 500 sectors closed lower, most notably amongst them the real estate. In fact, we're showing you the chart, the S&P REITs now, which closed down significantly on the day, and as you can see from the chart, has struggled to break above its 50-day moving average and moved sharply below that level yesterday. And with that weakness in equity prices, we had what's called technically bearish key day reversals in a number of key indices. A bearish key day reversal is when the index opens the session higher than the prior trading session and closes it below the lows of the prior day. That happened in the S&P 500, the Nasdaq, and a bunch of other equity indices, including the SOX. Indeed, you can see the Philly Sox chart in front of you now, the candlestick chart, with that open that was higher than the prior day and the close below it. Bearish key day reversals were a technical signal of buyer exhaustion and typically mark the start of a reversal in the trend. Like all technical signals, it's interesting, it's not totally 100% foolproof, but it's an interesting signal, particularly given it happened on higher volumes, which is something we've lacked in recent trading sessions whilst the market's been marching up. In addition to all that, our models continue to roll over from sell signal levels. The short-term technical scoring system is rolling, having given sell in recent trading sessions. The put to call model remains on sell, indicating complacency still and a lack of downside protection in portfolios. And added to that, risk appetite's been rolling over from sell levels in recent trading sessions. On top of that, the disconnect of the message between high yield junk spreads and the VIX remains. Even though the VIX bounced yesterday, in recent weeks it's fallen sharply as high yield spreads have traded sideways. Those two markets are giving a different message about the global appetite for risk. For the full analysis of how we're playing this market, please see today's Daily Rag, available to subscribers and on the website. So what are we watching today? Well, global economic indicators are pretty light today. US PPI, producer price inflation, will be of some interest, but primarily I think it's all eyes on Jerome Powell, the Federal Reserve Governor. He's giving a speech later today in the afternoon, London time. He'll be discussing current economic issues, so that'll be watched closely for any signs of further stimulus, how he sees the economy and so on. And we also have a speech by the Bank of England's Governor, Andrew Bailey. On top of that, earnings continue, particularly we've got Cisco Systems today, amongst others. So that's it from us. That's your morning market hit for Wednesday, May the 13th. Thank you for listening. Please do subscribe on YouTube, LinkedIn, Twitter and or Facebook. Thank you for listening. Stay safe and trade well.